Assalamualaikum. Hi, I am Muhammad Zarif.
Hi, I am Zul Hasif.
Hi, I am Istaufik bin Muhammad Zawawi.
Hai, Assalamualaikum. I am Muhammad Ali Fahmi.
Hi, hello. I'm Ame Hakimi.
Hi, I am Muhammad Nazim.
Nowadays, a significant rising in household debt has become a disturbing phenomenon in Malaysia, and it could lead to another financial crisis because the trend of this issue has been increasing since the early 2000s. Malaysia recorded one of the highest household debt level in the Asian region. The highest proportion of the loans were allocated for housing loans. According to Azmin, Zaidi and Muhammad, household debt refers to household which require payment or payment to the creditor of interest or principal on a future debt or debts for all liabilities such as loan for property, motor vehicle, personal use and so on. As mentioned repeatedly in the Quran, in Surah Ad-Dariyat verse 58, it clearly states that wealth belongs to Allah. The success of one is measured based on whether he has carried his responsibility for wealth management as a real Khalifah. When each individual fails to play their role in managing wealth, it will cause high household indebtedness, which makes the financial stability of an economy to deteriorate.
First of all, factors such as macroeconomic stability, interest rate, and advance in technology is said to be positively affected the household debt. Housing price is said to be directly related according to Zaharia's paper, but was opposed by Hafiza as she indicated housing price has an inverse relationship. Next, pricing and consumption will result in higher risk of debt. Mariam and Ahmad in 2015 blamed the departure from Islamic norms onto the rising household debt in Malaysia. They viewed the current loan culture as quite un-Islamic as debt should be the last choice for households. Disposable income and GDP also found to be factors related to rising in household debt. Unemployment rate according to Azwani is significant, but Zaharia's paper found no association. Lack of financial literacy also may affect debt culture. Lastly, demographic factor as young groups tend to expose higher risk of debt than other groups.
The rise in household debt in Malaysia has created alarm among households as it nearly hit 89.1% of total GDP in 2015. It is reported that the household segment accounted for one-third of the overall credit exposure of the banking sector before the crisis to more than half at present. According to NITOS in 2007, when household debt exceeds its highest level, a rise in interest rates can increase household repayment burdens and lead to a credit crisis. The outcome has demonstrated that change in long-term interest rates would have an effect on the developments in the short run. Even though households in Malaysia are in a robust financial condition and are able to absorb adverse shocks from higher interest rates and other financial shocks, regardless of whether households have overborrowed, rising household debt will inevitably impact them in order to repay their mortgage. Next, claims by Zoo in 2011 stated that households are spending over their means and placing financial stability at risk. This situation will eventually lead to bankruptcy. There were 124,708 cases of personal bankruptcy filed in Malaysia. Bankruptcy can affect people not only in the short term but also in the long term. If bankruptcy is reported on the credit history, it may even mean higher insurance rates, impact the ability of households to get a job or rent an apartment, and difficulties in secure a loan or a daily credit card.
We have reviewed several papers and analysed this one paper by Maznita and Azman on 2013 suggested about several proposed improvements. As the bulk of household debts are due to the funding of goods, the impact of deposit product is marginal since that are the result of loan, the result of borrowing. The proposed reforms therefore specifically relate to the funding of goods. And in this regard, it is noted that Islamic Bank or any organisation in general relies solely on consumer products rather than production. There are 5 different suggestions stated by the authors itself, including productive financing, consumptive, personal, long-term financing of fixed asset and regulatory supports. There are also suggestions for the central bank and Islamic Bank.
Despite all of this, the core of the problems should be identified first to ensure any steps taken are not wasted. The first challenge is The need for better knowledge on the household sector. Based on Endut and Hua, the ability to recognize and analyze emerging financial system vulnerabilities resulting from trends in that of the family is crucial in order allowing effective cultural interventions. Second challenges is the need to boost consumer financial capacity. The Central Bank of Malaysia Security of Consumer and Education Programs seek to enable them take responsibility for households to take care of their own finances. The last one is households need to know about prudential laws and supervision. The Central Bank of Malaysia carried out a broad industry analysis of the suitability, strength and efficiency of the banking sector's risk management infrastructure, efficiency and procedures in relation to its household exposure.
Zakat is the third pillar of Islam, and it is an obligation for Muslims to pay zakat on behalf of their wealth and themselves. From the Sharia perspective, zakat is defined as the allocation of certain property at a certain rate according to certain conditions to be distributed to certain groups. According to the article of Zakat and Debt by Wan Marhani Luqman and also Muhammad Ikhlas, there are two types of indebtedness, which is the payer or a debt to others that is payable that he must fulfill first, and vice versa. The eligibility to pay zakat will be different because it is affected by these two types of indebtedness and also may change the eligibility status of a payer of zakat. Some of jurists believe that some companions had a consensus which is ijma' that debt should be removed before the determination of zakatable assets. All of them were silent and the words of Sayyidina Osman were not denied by anyone, which is clearly indicated that the debt must be deducted prior before payment of zakat is made. There were some examples in Malaysia itself that business entities, particularly financial institutions such as Tabung Haji, pay the zakat on behalf of their customers. Pusat Pungutan Zakat Wilayah Persekutuan stated that if the haul is equal to or above the nisab, the deduction is made on the least balance number of the deposit. In order to be eligible to pay zakat on the deposit, a minimum value nisab and a minimum duration time, which is haul, should have been taken into account of the deposit balance.
To wrap up this topic, it is a fact that the debt sustained in compliance with Sharia is admissible and justified. People in need are permitted and encouraged to take out loans without guilt. Nevertheless, Islam has put some limits and prohibition on the use of debt to acquire luxury goods and maximize satisfaction. In order to fulfill maqasid Sharia, trying to address economic imbalance is a necessity in stabilizing the economy.